Whew, all right. Well, team, it's that time again. We're a little late. Okay, we are a little late, which I do apologize for, but I was running a tad bit over time. I had to go out to dinner with the client. You know, it seems as if I've noticed the majority of the dinners that I've gone on, right, with clients specifically that are coming in from out of town, it's always like the last minute. And it seems as if when I plan out my day, particularly if I do the right thing the night before, plan out the day, I have all my meetings, I have all my appointments, I have everything set, everything's perfect. Those are the only days that are chaotic. I don't know what it is. I think it's like the universe trying to tell me something. But I've noticed that every time that I'm super diligent in planning out the day, the night before, life throws at you a bunch of crazy stuff. Not in a bad way, right? Not in a bad way. I'm not complaining. Just people coming into town, texting me, hey, Tom, I'm in from, Colorado. I'm going to be here for 48 hours. We got to grab dinner. Crazy stuff. Anyway, you guys don't care about that. Let's get right into the stream. Today is July 19th, 2023. It is a Wednesday night here in New York. It's a beautiful day. Now, it's cooled down a bit, which is good. It was raining pretty much on and off all day. It stopped. Tomorrow's supposed to be the nice day. It's supposed to be gorgeous tomorrow. Tomorrow's supposed to rain. Friday is supposed to be a beautiful day. I have a couple updates and then we will get right into the markets here. I'm going to be doing some business travel on Friday. We will not have a live stream this Friday night, unfortunately. But on Saturday and Sunday, we will be live from Miami, Florida, which I think is going to be pretty cool because we do have a lot of new people here. So welcome to all of our new viewers to Walks on Wall Street. We're so happy you're here. The channel has been growing very fast, which I appreciate. I'm having a lot of fun doing this. So for all of those new viewers, I think you guys are going to enjoy seeing downtown Miami and Brickell on the live stream. And if we're lucky, we may just have a live stream from Coral Gables. But what I'm most excited about, particularly in downtown Miami, is to check out the brand new Aston Martin building, which is pretty much almost done. Now, the last time we were in Miami, which is about a month ago now, maybe 3 weeks, all of the lights were on at the Aston Martin building. So hopefully a lot of that scaffolding has been taken down. The Miami Riverwalk has been extended, so maybe we'll be able to get to check it out. I should say one of the first people to get to check it out. Anyway, so look forward to that on the weekend. But today, I think what I want to talk about is the market movement, specifically as it relates to the major equity indices. So if everybody pulls up the S&P 500, if you have your Bloomberg Terminal or MarketSmith or TradingView, sort of whatever you use for your charting software, this has been a very, very strong rally in the equity market, but we are having excessive extension above the 50-day moving average. Now, it's very critical that you build your positions appropriately as we transition, right? And this is just on the assumption we're transitioning from a traditional bear to a bull. It's very critical to get your position sizes correct on that first stage base out of a bear market. What happens is a lot of times, the market will be running away, and a lot of people who miss the rally will try to, pile in as we have, 3 or 4 days in a row where we're up, 1 or 2% in the market, which is what we've had. And then the next thing you know, we're about 7 to 10% extended above the 50-day moving average, and the market begins to correct down to the 50, and people tend to dislodge their core common stock. So as of doing this video, if you look at the S&P 500, we're about 258, give or take 260 points extended above the 50-day. Now, we will visit the 50-day again. I don't know if it's going to be in a day, in 3 weeks, in 2 months. So just know that if you've been building positions in individual stocks, particularly true market leaders that have been leading this market, the earnings growers, the revenue growers, stocks with great pre-tax and after-tax margins, fantastic return on equity. Those characteristics, those leaders are already out. Okay, the NVIDIAs, the Palo Alto networks, they're out. And I think it's going to be a little bit of a volatile time as we head into the tail end of the summer, specifically as we go towards August. A little bit of market data here, which I'd like to share via Excel. Unfortunately, I still don't have a proper way to share Excel spreadsheets with all of you. But usually going into August, markets tend to be a little bit more shaky as we get into those summer doldrums going into Labor Day, right into September. So just keep that in mind. Today, the market closed right at the mid of its range. And we had very, very high volume, which means there's probably a lot of institutions churning their portfolios. So whatever they've been up on quite a bit, you look at the NVIDIAs, you look at the Microsofts, pretty much anything that has shown relative strength that's already up 50%, I think there was a lot of trimming and rotation in the portfolio. So just keep that in mind. We'll talk about that. I do want to shift gears over to the bond market real quick. Interesting movements in the bond market. Yields pretty much up all day. If you look at the 10-year US Treasury, we're trading at 3.756%. If we look at the main spreads between the 10 and the 2s, the 2-year Treasury is yielding about 4.775. So still inversion of the yield curve, which usually, which I don't think we're going to have enough time to talk about tonight, usually forecast recessions. I don't think it's going to happen this time. We'll see. And the 1-year US Treasury actually ticked higher yet again today, right around 5.354%. What I want to do is head towards the Brooklyn Bridge tonight. We tried to walk over there last night on the live stream. Unfortunately, we did not have enough time to do so. So we're reporting live from Canal Street. I think it's appropriate to go through Chinatown, through Little Italy, and then we're gonna head down to the Brooklyn Bridge. And since it's a really clear night, I think we're gonna have amazing, amazing views. So let me go ahead and close up my laptop here. I'm gonna get my backpack situated, and I will say hello to all of the beautiful viewers in the chat, and we'll get started. So bear with me 1 second. All right, you know, another thing I want to briefly talk about tonight, I think we need to stay ahead of the curve as it relates to the housing market, because especially here in New York, as it relates to rentals, we're starting to see some softening here in the environment, and we'll talk about some of the potential leading indicators that I use to try to decipher that. But first, let's sort of situate ourselves. I think a lot of you, it's crazy. I've been getting a lot of emails of people, they've been tracking where we walk each night on Walks from Wall Street on Google Maps, and they've actually been sending me So this is exactly on the corner of Canal Street and 6th Avenue, or as they call it, Avenue of the Americas. We have a straight shot, a gorgeous view tonight, guys, of One World Trade Center. As we pan the camera over a little bit to the left, right behind this office building is actually going to be the Jenga building, which is a very famous building, very upscale, ultra luxury condominium. I think the former chairman of SoftBank, which is the Japanese conglomerate, FDNY coming by, Marcelo has an apartment in there, and also the former CFO, the Chief Financial Officer of Bed Bath & Beyond. For additional context, Canal Street will take you all the way across the island of Manhattan. So in the camera view right now, we are pointed west. So this is going to run you all the way to the tunnel, which will take you to New Jersey. Hello to all of our viewers in New Jersey. And then if you hammer Canal Street all the way down to the east side, this is actually going to run you all the way into the Manhattan Bridge. It'll cut you through Chinatown, it'll cut you through Little Italy, and this is exactly where we're going to walk tonight. Finally, Empire State Building. Beautiful view in the distance. All right, let's say hello to everybody in the chat. That's more important. Hey, I see Riley is here. What's up? The one and only Cosmos Scary. Stephen Bate is here. Beautiful Stranger, Sammy Wu, Richard Vogel, RS, British Gray from Tampa, Florida. I will be in Miami, please God willing, Friday night. John Burke is here, Austin City Limits, Kitty in the City, Lena Sandoval, Manhattan, Rail, Justin S., Teresa Diaz, The Garlic, Dave in Maine, Solo Flyer, Michelle Henry. Wow, we got a packed house pretty early on tonight. It's good to see you guys. This is one of my highlights of my day. CA2SD says, hey Tom and gang. Susan, welcome. Hang with Mark Mom. Always a pleasure to see you. Wow, Bighorn MT says hello from West Palm Beach. Speaking of Palm Beach, my good friend sent me an article today on The Real Deal. Is anybody familiar with that publication before we cross the street? I actually really don't like starting off the stream on this intersection. This is a horrible intersection. People blowing red lights. It's very awkward for the pedestrians crossing this way because they have the green arrow turning into the tunnel. Anyway, but big news coming out of The Real Deal. There was a massive deal that was closed in Palm Beach, Florida, with Ken Griffin from Citadel Securities. It was about an $83 million deal. They're expanding their hedge fund operations to Palm Beach. So big congratulations there. So hopefully some Citadel employees that were formerly employed in Chicago, maybe they'll be seeing some better weather in South Florida. Who knows? $83 million, pretty big deal. You know, commercial real estate and real estate in particular in South Florida, places like Fort Lauderdale, Miami, Palm Beach, I think it's getting a little bit frothy. And I'm trying to be as objective as possible and as unbiased as possible about this because I do own real estate there. So it is in my best interest to sort of talk it up. But, you know, from an honest perspective, I think we're getting a little bit crazy here in terms of valuations. Who would agree with that? Because I know we'll probably have an interesting dialogue back and forth. Once again, this is the Jenga building, which is super unique. Speaking of Chicago, right at the base of this building, okay, and you could Google it to sort of see it for yourself. We may have time to walk past it tonight. There's actually one of the beans that they have in Chicago, literally right at the base of that building, which is quite interesting. So, hey, Mac lovers here. Long time no see, man. Hopefully you're doing well. Let's see what you say. It says, hey Tom, did you hear today Apple is getting deeper into AI with Apple GPT? They will still avoid calling it AI. I've noticed that. I've noticed that they're trying to avoid calling it artificial intelligence specifically. And if you remembered from the last earnings call, right? If you remembered from the last earnings call, Tim Cook specifically would not use or refused, right, to use the term AI or artificial intelligence. And that's in huge, stark contrast to essentially every single tech company under the sun, that if you had a counter, okay, of how many times these tech CEOs use these buzzwords, it was a little bit overdoing it, to be quite honest. So, look, we'll see. I think we're still pretty early in the cycle of AI. I think there are pockets of speculative excess, but think about the IPO market, and we'll briefly talk about that for a moment because we are now in the beginning of earnings season. Believe it or not, earnings season is back here once again, and earnings season always starts off with the financials, the big banks, the big broker dealers, and that not only gives us a pretty good gauge in terms of the health of the average retail consumer, the American consumer, in terms of credit cards and the like, but it also will give us a pretty good proxy of how corporate health is going as well. So if you think about new issues, right? Initial public offerings and SPACs. We have not had not one, artificial intelligence solely IPO, not yet. And if you think back to, if you want to do some comparative analysis here, if you think back to the 2000 sort of speculative tech and telecom boom, there was 1,000 IPOs of .com stocks, with the vast majority of those .com stocks either having no earnings or being pre-revenue. And we've not yet had not one, pure play artificial intelligence IPO. So I still think this could potentially be a little bit early. Kevin Grant is here, what's up? Good to see you, Kevin. Thanks for joining us. We're on Canal Street tonight. Carl Roth's is California AI strike. Bree Grams is here. Molly Dorrance is happy to be with you. Happy you're here. You can see everybody packing up for the night. Usually during the day you have all these vendors selling makeshift goods, if you will. MBA Alliance is Goldman Sachs and Bank of America profits is feast or famine. Goldman Sachs down 58% versus Bank of America up 19%. Yeah, and MBA Alliance, good to see you, by the way, man. Hopefully you're doing well. Now, very good point. So let's sort of expand on that. Why do we think that may be the case, right? As it relates to corporate earnings. So why might that be the case? Look at how gorgeous these blocks are here in Soho. These are the original Soho loft style buildings. You have the cobblestone streets, and I know they're not called cobblestone streets. I know it's called something else, and you guys flame me in the comments. I can never remember what it's exactly called, but anyway, if you think about the difference, the main difference between Goldman Sachs and Bank of America is the way the business is structured and tailored, if you will. So Bank of America, right, if you walk down the street, chances are in your local community, in your town, wherever you are, chances are you will see a retail banking branch of Bank of America, which means you could go there and open a checking account. You could open a savings account. You could open a business checking or savings account, and it's geared towards consumers. So Bank of America has a very robust consumer banking business in addition to its investment banking and corporate banking business. You can't really say the same thing about Goldman Sachs. You know, if you walk down the street, you're not going to see a retail, storefront with the insignia GS, Goldman Sachs. It's not a retail bank. It's an investment bank. They help companies raise money. They help companies go public via SPAC or IPO. They help companies restructure their debt, right? It's a different style bank. So it would kind of make sense that some of the banks that are also have a huge consumer and retail banking business would be faring a little bit better, because ever since interest rates started to go up, deal flow on Wall Street has contracted. But we are seeing some signs that deal flow in the IPO market is just beginning to open back up again. Check this out, guys. Look at this. Here's the question of the night. Would you live in one of these Soho style lofts? I'm going to stop talking for a moment. I want you to really see how quiet it is. Very, very different from Midtown. Isn't that beautiful? The facades of the buildings. It's really unbelievable. Hey, DM, what's up? DM, good to see you. Always a pleasure. Hey, Addison, what's up? Says, heck yeah, I would, especially if I didn't have to pay the rent. Yeah, I think you and me both, man. Now, I gotta tell you guys, I'm working with one of the top real estate developers and real estate sales teams in the city. They have an amazing listing I want you guys to check it out for yourself. I don't think we're gonna have enough time to walk past it tonight, but the listing is 74 Grand Street. It is a gorgeous Soho loft, very similar to these that you see here. And the interesting thing is, when you look at the building, when you look at the front of 74 Grand Street, okay, it is all the original cast iron facade. It doesn't even look like the building's been touched. But on the inside, it is a total gut renovation, and the elevator actually drops you right off in your living room. And that's actually been very fashionable now in new developments. A lot of tenants like when you have just, you walk into the elevator and the elevator opens up right into your apartment. It is an unbelievable building. I think the penthouse is on the market, I think for $23,000 per month as a rental, which actually isn't bad, right? For the square footage and for the location and for the remodel, 23,000 bucks a month, not bad. That is in line with market rents, and a little bit less in terms of price per square foot if you want to compare it to like Tribeca. So pretty interesting. Hey, Abdul is here, what's up? Mark SRT says good evening all, the wizard. Welcome, welcome. Hawaii is here. Always a pleasure to see you. David says walked through Soho last week. Oh, cool, man. Yeah, I mean, it's one of my favorite neighborhoods. It's very unique. You could see One World Trade Center all the way in the distance here. It's really awesome. MBA Alliance, Goldman Sachs indicated that its consumer businesses and declining investment value is the worst result in 3 years. Well, they tried to go all crazy with Marcus by Goldman Sachs. Now, I could see why they had the idea. You know, it's funny, if anybody's ever been on the earnings call over the past, I don't know, 2 years, the analysts are always hammer David Solomon about their decision to dive into retail banking. And they did that with their Marcus by Goldman Sachs arm, but I think they're actually turning that down. I think they're shutting that down in and of itself. I mean, the investment banking business and the sales and trading business at Goldman Sachs is so strong as it is. It is such an iconic brand name that I don't think they really needed to try to dive into the retail market. Because retail, in my view, is actually more competitive than going up against a corporate deal against JP Morgan Chase, against BNP Paribas, right? Any of the big bulge bracket banks. The consumer business is like a race to zero in my view, which is actually good for the consumer, bad for the businesses. But that's capitalism, right? More competition in these industries brings lower prices, better products and services for the consumer, which is us. And that's why I argue that technology has really been deflationary in nature. Look at this outdoor dining setup. This is gorgeous here. Hey, Tim G, what's up? This is Goldman Sachs. Oh, look at that. Oh, who saw that? Who caught that, by the way? I don't know if the camera was too far up. This big rat, big guy. Yeah, under TARP, they bought GE Capital in 2008. Yeah. Tariq Khan, welcome. Thanks for joining us. I think they did a nice job with the outdoor dining setup here. Looks good. NBA Elias is Tom, what can you get for $23,000 a month in Miami? Well, it depends on where you are. I mean, Miami is a really, really big place. Are you looking for something in like an ultra luxurious apartment building, like 1000 Museum, Aston Martin building, something like that? Because if so, you could probably get a really nice place. You could actually probably get less on, let's say, like Fisher Island. You probably can't even get on Fisher Island for $23,000 a month. Normandy Shores, you can get a really nice place on the water in Normandy Shores. This is Howard Street. Really beautiful here. Joe C says, how's your day going? It's going really good. Things are going well. It's been a busy day. but busy is good. I'll never complain about busy. That means things are progressing. Really nice. I don't think I've ever eaten here, but it does look nice. You can see the bartender in the window, and it's packed for a Wednesday night. Steph UH, good to see you. You're in Florida. I'll be there Friday, hopefully. But real quick, we reviewed this at the very beginning of the stream, but I think it's appropriate just to quickly go over it just one more time because it's super critical. Now, Twitter is a very good resource, particularly Twitter Spaces. So one of my good friends, Jim Ropel is the founding partner at Ropel Capital Management. He has a co-PM, co-portfolio manager, Eve Bobach, who actually used to work at the Federal Reserve. She's an amazing portfolio manager. I think she runs the small cap equity fund at Ropel Capital Management. Very successful. And they actually did a Twitter Spaces today talking about a lot of the things we've been going over on the live stream, actually. Let's just cross on Broadway for a moment. And then we're gonna get back on Canal and sort of head out. But a lot of the leaders are out, right? And if you've seen some of my tweets over the last couple of days, we've been defining characteristics of a true market leader, right? So as you're going through your idea generation process, right, you should be following that systematic process, that systematic framework if you're choosing individual stocks, right? Your top down, your bottom up framework. So you start with a macro level. Okay, where are we in terms of monetary policy, right? Because monetary policy is a big factor as it relates to equity valuations. Where are we in terms of a micro level in either, the United States, Latin America, Asia? You get the picture. And then you could hammer down into your sector, industry, and then finally your stock level. So a lot of these TMLs that have all these characteristics, 25% plus earnings growth, quarter over quarter, 25% plus per annum EPS growth, pre-tax, after-tax margins, very high. Return on equity, 25% plus. All of those characteristics, those leaders are out. Palo Alto Networks, NVIDIA, they're extended. So what can happen as we have this market transition, right? Assuming we're transitioning from a bear to a bull, the market is going to pull back at some point and test the 50-day. So if you pull up the NASDAQ, the Dow 30, or the S&P 500, we have an average extension of about 7 or 8% above the 50-day. Now, this is where it's very important to pay attention to beta, right? Now, you may have heard us talk about this on the stream of beta weighting your portfolio, which essentially is if the S&P has a plus or minus move of 1% in a day, a lot of the individual stocks that have a higher beta as it relates to the S&P, they could have intraday moves of 3, 5, and even 10%, right? So knowing that extension above the 50-day in the major indices, and knowing that if you look back throughout market history and do your back testing that you all should be doing in Excel, you're probably going to get whipped in and out of some stock. So it's important that if you have these full positions on, right, let's say if, stock XYZ had a beat and raise quarter, it gapped up 10% after the rebel, and you committed 10% equity, right? As a starter position, as this thing is emerging from its base, and it's up, let's say 20%. So you're now making money and you're laddering into your position. if the S&P comes down 3 to 5%, that thing's probably going to come down to its 50-day, and that means a 20% drawdown. So there's multiple ways you could hedge this. Now, this isn't a recommendation to do anything, but if you are in the business of managing money, either your personal assets or a fund that you're running, I think it's very important to start to look at the options market here, because we did have a little bit of a bid in the VIX today, to see, okay, either are you going to sell down that position or are you just going to hedge it with options? That's very important. So what I would do this weekend, we're coming up on the end of the week, right? Tomorrow's Thursday into Friday. I would go through everything you got, everything that you're long, everything that you're short, and look at that particular individual stock's beta as it relates to the S&P. And if you're long a lot of high beta stuff and these ideas are working for you, I would blow out all the laggards, right? Because chances are, but if you're trying to work into multiple names, you've had multiple ideas, maybe it's a good idea to raise some capital but blow out all of your laggards, right? So let's say if you're long a stock, it's up 20%, but there's 3 or 4 stocks in your portfolio that are about flat. Maybe blow those out and have that equity to potentially redeploy should we have a normal correction down to the 50-day. So again, not a recommendation to do anything, but I think that's so critical. And today there was a free space on Twitter. This is why Twitter is so valuable. Jim Ropel from Ropel Capital Management, good friend of mine, was sort of explaining exactly this. The good news is, if you missed the Twitter space, it's archived. You can go back and listen to it for free. So I think it's a really good learning mechanism. If you want to re-listen to that space, I think I may have retweeted it. So if you just go to my Twitter profile, at Walks Wall Street. This is really nice, by the way. This is Little Italy. This is beautiful. You can listen to it for free. So check it out. Hey, Robert is here. What's up? David says high yield is the best opportunity today, in my opinion. Yeah, well, bond yields are finally real in terms of real rate of return. Maybe we'll take a quick detour through Little Italy. We haven't been here in a long time, I feel. It's a really beautiful neighborhood. It's one of my favorite in the city. Now, what's interesting about Little Italy is you would think, you know, if somebody asked you a trivia question, right? And they said, what is the most expensive? And when I say expensive, I mean on a price per square foot basis in Manhattan. You would think, oh, it's Billionaires Row because of Central Park Tower, 432 Park Avenue, 157, the Steinway Tower. You would actually be wrong. The most expensive neighborhoods, or I should say zip code, if you will, is Tribeca, extending over into parts of Soho, Little Italy, and Chinatown. It's very fashionable down here. And I think that just goes to show that, you know, some of the, I should say, the original Soho lofts that we just passed a while ago that are being fully revamped. They're keeping the facades, I should say the architectural integrity of those facades, they're keeping them fully intact to preserve the originality, if you will, of the neighborhood. But on the inside, it's just like living on Billionaires Row. You have all of the new finishes, all of the new furnishings. Really nice. Yeah, Dan Zhang says, in all the fake handbags you can buy on Canal Street. Yeah, that's true too. This is a nice Italian restaurant here. Let's check out some of the prices. What do we got here for prices, guys? Everything on the menus ranges from like $22 to $36. Not bad. It looks like more of the restaurants on the other side of the street are a little more lively. Still have the outdoor dining shelters going. Yeah, Tariqan's is not bad at all. Some places here though are a little, the prices are a little touristy, if you know what I mean. When I say prices are a little touristy, that's a descriptive term for, you know, expensive, if you will. But look, I think it's a nice place to, you know, have a drink after work, to dine outside. Look at the beautiful architecture. Hey, Dan Sang is here, dude. I didn't know Dan's in the area. This is Dan's Ferrari. I could always tell because he has the STAX license plate. I didn't know you were gonna be here tonight. Oh, is that right, Dave? David says I stopped by last week for a drink. It's on the right hand of the street, a few blocks up, great Italian restaurant. We'll probably walk past it tonight. This is Hester Street, by the way. You know, I always come to Little Italy, but very seldom do I eat Italian food here. I only eat the pastries at like DeFara's. Not DeFara's, my God, Ferrara's. DeFara's is actually a really good pizza spot in Brooklyn. I think it's actually one of the best in New York City as it relates to the 5 boroughs. But yeah, I never really have dinner here. This looks like there's some sort of a party going on here. Hey, everything in Miami, what's up? Says, how cool would it be to live above one of these restaurants? I think it'd be cool if you're young. Maybe a little bit noisy into the night though. 189 Hester Street. Yeah, Haas Manning says this area of the city is great for walkability. It really is, and the trains aren't too bad either to get to Midtown, assuming that's, you know, where you work. Not too bad. Hester Street in Mulberry. You know, before we know it, we're gonna have the San Gennaro's feast coming up. That's always a good time. NBA Elias says, walks to Wall Street, Little Italy party. If I ever, listen, I'll promise you guys this. If I ever get a nice loft in Soho or even here, right off of Mulberry, I'm down to do that, 100%. Oh wow, Addison says, I'm going to Miami for a bachelor party in early September. Do you recommend any activities? Well, first and foremost, you're gonna love it, man. I've been in Miami for how many years now? I can't believe I'm saying how many years. It seemed like just a few months ago I moved there. 2020, I think? It's an awesome place. I would say this. Try not to go to the typical like South Beach neighborhood. Now South Beach is nice, but I think there's more to explore. I would check out downtown Miami and Brickell specifically, right in and around the Brickell City Center. I think you're gonna like that. That's personally my favorite part. In and around Brickell City Center, there's like millions of things to do. I mean, if you've seen one of our live streams there in Miami, you'll sort of know what I'm talking about, but we'll be live from there on Saturday. So Brickell City Center, in and around Brickell, downtown Miami, and if you have time, head up to Little Buenos Aires. So Little Buenos Aires is 72nd Street and Collins Avenue. That's actually my favorite neighborhood in all of Miami. It's a little bit quieter. The beaches are super clean, and there's a lot of good Cuban and Argentine restaurants. Very, very good stuff. And the prices aren't super high like they're gonna be in Brickell and downtown Miami, because it's more local. So that's what I'd suggest. But you're gonna love it, man. I absolutely love living down there. When I'm in New York, I just rent out my place. I actually have to go back down and check out all the work. I had a contractor, had to do a bunch of stuff, but yeah, Ryan Beck says Versailles is great Cuban food. It is. There's one at the airport too, I think. If you've ever flown into Miami International, There's one right there. But I was gonna ask, so now that we're talking about travel, I was gonna ask you guys, has anybody flown recently? And I'm talking about within the last 2 to 3 weeks. I've heard several stories. This is one of the best bakeries in Little Italy, by the way, Ferrara, established in 1892. Great place for like cannolis and all that, great pastries. But the flights have been horrible. There's been delays, there's been cancellations. It sort of reminds me of traveling in 2021. I've actually kept a spreadsheet. I've flown over 22 times in 2021. And every single time that I've flown, the flight was either delayed, had severe mechanical problems, the battery died right as we were about to take off on the runway, or just canceled overall, and not even for weather issues either. So I don't know what's going on. It seems like the infrastructure in the United States is not doing too well, unfortunately. Oh wow, 3D says it has sucked. I fly every week and it's not been great. Yeah, what the heck is going on with that? And it's not, I don't really think it's weather related because the weather's been fine. Ryan Beck says no delays for me, but Denver International was slam packed. I have clear and made it through in 20 minutes. Okay. You know what? I think I do have clear, but for some reason, the American Airlines terminal at Miami International Airport has no clear. So the airline that I fly doesn't have the ability to even do clear, but I think I'm paying for it. I think I pay like, what, $100 a year for it? I don't know. Interesting to see the responses here. Photos from around New York says JetBlue now charges for carry-on bags. That's ridiculous. I really only fly American Airlines now. I sort of refuse to fly Spirit. Frontier, Spirit. Those are really the only two airlines that I just refuse. I think I'm at the age now where it's, look, I'm gonna bite the bullet. I'm gonna pay the $200 to fly. I don't need to pay, the $50 to fly Spirit and, dodging bullets. I'm just trying to get from point A to point B. Now this is a nice place. This place is always busy. It just doesn't seem as busy because there's a lot of seating. Daryl's here, what's up? Says hello, Tom from Chicago, Illinois. Always a pleasure. Bighorn MT says Delta is my favorite. Oh, no way. Everything in Miami says you're right by my office at 188 Grand Street. You have an awesome office here, my friend. Definitely never have a shortage of things to do, especially on your lunch break. We'll have to meet up one of these days, especially if we're ever in Miami at the same time. We'll have to meet up. I'm gonna see if I could take you guys in the street because there's an amazing view of the Empire State Building. But I think we got some traffic coming. Oh wow, Tim G says my office in Miami is 444 Brickell. I got a question for you. 444 Brickell. I think that may be the same building as Bricadia. I got a good friend down there who does essentially like CRE sales, commercial real estate, land sales. He's also a really good follow on Twitter, by the way. This kid, Omar Morales. Young guy, and he is killing it in the broker business down there. Really nice guy. I think Bricadia's office may be there, but maybe I'm mistaken. I'm excited for Ken Griffin to break ground at his new office tower. We were just talking, my good buddy sent me a Real Deal article today. Ken Griffin spent, I think, $83 million, give or take, on expanding their hedge fund operations in Palm Beach. I don't know, it seems a little bit frothy. It seems like, some of the numbers that have been, that a lot of these properties have been trading for down there, a little bit frothy. Now, for all of our Miamians who operate in real estate, I also have an additional follow-up question. And of course, I forget the name of the company right as I'm about to talk about it. Just came back to me. Genting. So Genting, I believe, owns and operates tons of casinos. I think they even operate some casinos here in New York, near JFK Airport. I think they own a plot of land just north of the old FTX Arena, or Miami Heat Arena. And I think that deal fell through, did it not? I think that was supposed to be like a $1.3 billion deal just for the plot of land. And for whatever reason, the deal fell through. I think it expired, something like that. The diligence phase expired. Did anybody see that or hear about that deal? Wow, look at these fire escapes. Everything in Miami says I heard Blackstone will be exceeding earnings estimates tomorrow or Friday. We'll see. I mean, Blackstone, I think, gave the keys back to a big office building in Midtown East. I think there's going to be a lot of pain in the commercial real estate sector. We'll see. This is a good, what's it called? Egyptian place. Since we're here, we might as well walk past it. It's called Zuba. I'm not sure if we have any viewers from Egypt, but if you come to New York, we actually have pretty good Egyptian food. It's right on the corner. It's not bad. Hey, Will M, what's up? Always good to see you, Will M. Thank you for joining. Zozo Bombs says, Tom, that deal with Genting fell through because the buyers wanted an extension and they said no. Wow. I think that's going to come back to bite them. I think that if they granted the extension, it was probably just because they wanted to do additional diligence, right? So, Zozo Bob, what was the total dollar amount on the deal? I think it was like $1.3 billion deal, was it not? I mean, you're top tick in the market, so who knows? Hey, Michael Anthony says, after the close today, United Airlines says it made $1 billion in the second quarter and sees strong remainder of 2023. Well, that's a pretty good proxy for the health of the consumer, right? And it also plays right into the narrative. This is Zuba, by the way. This is fresh out of Cairo since 2012. Very good restaurant. But it sort of, plays right into the narrative that we've been talking about, which is consumer spending has been very robust. And that's actually surprised many analysts, economists, and even PMs on the street. And I think we could look to one data point for our answer as to why this is happening. And if you've been listening to any of the FOMC meetings, or the Federal Open Market Committee meetings, one of the things that Fed Chair Jerome Powell always brings up is wage inflation. And wage inflation is very strong. Wages are going up in America. People are generally making more money. If you look at the data between 2021 and 2022, on average, and these are full-time salaried employees, by the way. On average, people who've left their jobs between 2021 and got new jobs in 2022, the average pay raise was 9%. That's a pretty big jump, and that's the average. So there's obviously statistical outliers. And as we talked about earlier on the live stream, I guess we'll cross back over because we got to go to the Brooklyn Bridge. I'm getting sidetracked. As we talked about earlier in the week, people suffer from lifestyle creep, right? So if you get a job that pays you, $20,000 a year more, very seldom do people still live within the range of their previous salary. They usually spend right up to the brim of their new salary. So I think that's another reason why consumer spending has been strong. Hey, Andrew, what's up? Just any thoughts on NVIDIA upside potential? Well, I'll sort of answer the question with sort of what we recapped. And today, I'll give you a good resource. If you go to my Twitter page, there was a great Twitter Spaces today, a fantastic Twitter Spaces with a very successful hedge fund manager, right? And this is all free. That's why I always say, just by creating a Twitter account, you're generating alpha in and of itself. But there was a Twitter Spaces all about how to handle this extension in the market. Because what's happened is all these major equity indices, they're already out and rallied, which means individual stocks like NVIDIA, Palo Alto Networks, the true market leaders, these things are super, super extended, especially above the 50, the 200, and the 100-day moving average. So you're starting to see a lot of talk from people who have, been a little bit late to the game, saying, okay, I got to get in. I'm feeling FOMO. What stocks should I buy? And I think that's sort of right around the time where we're probably going to digest in the market. So this is a good exercise to do. And we sort of briefly talked about this maybe 20 minutes ago on the stream. Go through everything you own this weekend, right? Saturday, Sunday, go to a nice coffee shop, buy yourself a cold brew, and sit down and say, okay, what do I own? Look at your book. And chances are, if you've gotten long anything, right, that is good fundamentals, you're doing well. It may be wise to trim all of your laggards, right? Because the biggest mistake I think people make, and this was sort of explained in the podcast by Ropel Capital Management, is when you're emerging from a bear market to a bull market, investors dislodge their core common stock positions way too early because they get freaked out when you have normal corrections back down to major moving averages. So if you're buying these things here, I think there's a high probability you're going to get shaken around and shaken out. Today was a big churn day in the market. The market churned very, very badly today, which is a sign of a coming pullback. And we closed dead in the middle of the range. Look at the daily bar today on the S&P. Heavy volume day, which means things traded a lot. But I think that was institutional players who were up big on core positions, offloading and rotating into smaller caps. So I think if you're initiating a long here, I think there's a high probability you're going to get shaken out and suffer some volatility. That's just my opinion. Doesn't mean I'm right. Right? Doesn't mean I'm wrong. Just, if you had to ask me, that's sort of what I would say. But I don't know. I want to flip the question back on you guys. Like, selfishly, we have about 1,000 people in the chat. With all probabilities, there's probably about, oh, look at this cop here. Undercover guy. There's probably a lot of people who are a heck of a lot smarter than me in the chat. What do we think? Do we think that do we think that major indices, especially individual stocks, are getting a little bit extended here? And as we go into the summer doldrums, we may have a normal, much needed pullback? I don't know. What do you guys think? I want to spin the question back on you. Ryan Beck says how people can't take profit after 100% moves in 3 to 6 month periods is abnormal. Well, there's some interest, and this is really, does anybody know, let me ask this question. Does anybody know the best way where I could share Microsoft Excel files to the public? Would I just have to create like a Google Cloud account and just drop the files in and just make it an open file? Because I've done historical research on this, right? This is sort of what I used to do in college in my spare time. I've back tested the performance of true market leaders. Oh, we missed our turn. This is the Bowery, by the way. This used to be a really not so good place back in the day. Now it's very hipstery, very cool. You have the Empire State Building all the way in the distance. Addison says, I believe the next 4 months will be directly correlated to the Fed's rate decisions. That's possible too. Now, to your point, that's what we're going to hear from next week. Next week is the FOMC meeting, where the Federal Reserve will set the precedent for monetary policy. And currently it looks like we're going to get another 25 basis point rate hike. Look at that. That's a gorgeous shot here of One World Trade Center. But I'll say this. It's a really good exercise because all of this information is publicly available for free for everybody, right? If you go on Yahoo Finance, even Google Finance is now actually really good. You can pull historical price data from pretty much every single publicly traded stock. So what you can do is when you export that into Excel, go line item by line item. I'll just use the example of Google since we were talking about Google. Go back 3 bear markets. And the reason why I say that is because you want to get as much data as possible into your data set so you can analyze this data. And what you want to try to do is find the stocks that went up the most during previous bull markets and then reverse engineer it and ask yourself why, right? It's sort of like doing a post analysis on this. And what you'll find is 9 times out of 10, these companies possess a very specific set of characteristics, very specific set of earnings profiles, but not only a very specific set of an earnings profile, they've tended to beat and raise 6 or more times throughout its bull run. And I actually gave you an example of this previous bull market from 2020 to now on a stock called ELF. So if you look up the ticker symbol ELF, or if you just go to my Twitter page at Walks Wall Street, the data points show that if you can find a company 7-minute walk that has 6 to 10 beat and raise quarters, the stock will on average go up 400%. I'll say that again. If you can find a stock that goes through 6 to 8 beat and raise quarters, which means if Wall Street analysts are saying, hey, we expect XYZ company to make $1 a share on $1 billion in revenue, and that company reports $2 a share on $1.5 billion in revenue, that is a beat. So you're beating on both the top and the bottom line. And the raise is when the CFO or the CEO comes on the call and says something along the lines of, you know, we've done so well this quarter to procure more new business, and our outlook on the future is so optimistic because we're getting a huge backlog of new orders that we're actually going to adjust and raise our guidance for the full fiscal year or the next coming quarter. That is a raise. So there's articles on this. If you just look up ELF Beauty, ELF, right? And I'm not saying go buy this stock. We're using it as a model. So as you're generating ideas, you could try to essentially plug and play these characteristics to other companies. So since 2020, obviously you have 4 quarters in a year. ELF has had over 8 beat and raise quarters. And I'll let you guys do some due diligence. From 2020 to now, what is the percentage gain of that stock? And you'll be dumbfounded to find out it falls almost exactly within those parameters of the data that we've back tested previously. Hold on, let me orient myself here. No, we're going the right way. We're going the right way, don't worry. We've overshot the Brooklyn Bridge by about a good mile, but we'll make up the time, no worries. We're actually at the very front of the Manhattan Bridge right now. So, hey, Jesse's here. Says, Tom, are you walking to Wall Street? We probably won't get there tonight. We were down there yesterday as we were talking about One Wall Street, which is the new development. You know, the development One Wall Street is the largest office to condo conversion in the history of New York City. And that is a Harry Maclau building, the same gentleman who is responsible for 432 Park Avenue. Hey, Ren 1018 is here. Let me catch up on some of the chats. This is the main entrance to the Manhattan Bridge, by the way. You can see all the cars coming off the off-ramp. Now, I actually like the entrance to the Manhattan Bridge a little bit better than the Brooklyn Bridge. It's this big, inviting sort of concrete structure here. Hey, Joe Driver's here. What's up, Joe? It's good to see you. Michael Anthony. Whoa. What was that? Anybody else hear that? Yeah, so Addison's ELF stock chart is up and to the right. So I just want to be clear one more time, because sometimes people will take what I say and say, oh my God, Walks on Wall Street was talking about this stock, I'm going to go buy it. Do not do that under any circumstance. These streams are for educational purposes to show you guys how to build a fundamental, systematic investing process, just like you would learn if you're in sales and trading at an investment bank or you work at a hedge fund. Right? A lot of the stuff you see on YouTube about the top 50 stocks to buy now, that's all nonsense, okay? You've got to learn how to be self-sufficient and model these companies yourself. So there's tons of free resources on this. I'll give you guys a couple. If you want to get in and learn financial modeling the appropriate way, there's a professor at NYU, Professor Damodaran. He's one of the most well-renowned and respected finance professors in the United States. He teaches right here at the Stern School of Business. And if you just go to his YouTube channel, he is so generous with his time that he actually uploads the majority of his lectures for free. Seriously. So if you just go to YouTube and type in Professor Damodaran NYU, his YouTube channel will be right there. His videos don't get a lot of views for the value he provides, but again, that's because, you know, YouTube tends to push the videos that say, you know, these 10 stocks to buy right now, and not, you know, how to do a discounted cash flow model the appropriate way, right? But what you want to do is you want to invest the time in the learning these fundamental skills, right? Because the more you can increase your skill set, the more you can talent stack, as I like to say, the more valuable you're going to be in the marketplace. And you don't necessarily have to work in finance, right? This will help you in your critical thinking skills in any profession. You could be a teacher, you could be a doctor, a lawyer, a nurse, doesn't matter. An electrician, an HVAC mechanic, It's important to learn how to think objectively, how to think critically, and rely on your own analysis. All right, we gotta pick up the pace a little bit, guys. Or we may just cheat tonight and go to the Manhattan Bridge. I'm trying to think. Let me check the battery, actually. All right, I think we'll have enough time to go to the Brooklyn Bridge. The Manhattan Bridge has great views, but I think it would be better to do that tomorrow night. Somebody's asking who the professor is. I'm horrible at spelling, but if you sound it out and type it, you'll find him. He's one of the most well-respected professors at NYU Stern School of Business. Now, he's very famous for two specific courses. Course number 1 is securities analysis, and course number 2 is corporate finance. But if you don't have the money, right, or you're not smart enough to get an NYU, like I'm not, you could essentially become an autodidact, if you will, and sort of teach it to yourself by just watching a lot of his lectures. And he does a really good job. He's one of my favorite professors. Oh, I think Sunshine After Rain actually is going to drop the link in the chat. I forgot I programmed it in the chat. We'll take a quick walk past Chinatown. This is a great spot, Great Noodle Town, New York. This is an awesome spot. This is right on the corner of Bayard Street and Bowery. You guys got to come here. Ah, yes, photos from around New York, Professor Atswat Damodaran. So that's gonna teach you guys how to do financial modeling, right? And you're learning from a professor from one of the top business schools in the world. So it's not like, you know, you're learning from some person who doesn't have any credentials. This is a very smart guy. Secondly, pretty much any book is available at your fingertips for free. My personal favorite is How to Make Money in Stocks by William J. O'Neill, who unfortunately just passed away this Memorial Day, which is really unfortunate. He's the founder of Investors Business Daily. Now, before he died, he actually sold his company to News Corporation. So News Corp now controls the Wall Street Journal. They control Barron's, and now Investors Business Daily. You see this little cone right here? That's actually the top of the Chrysler building, right there. That is super cool. And another good one is by Phil Fisher. So Phil Fisher was the founder of Fisher Investments, and he wrote an investment classic. I think it's one of the most purchased investment books of all time. It's called Common Stocks and Uncommon Profits by Phil Fisher. It's a great book and very easy read too. You know, that book is not like a lot of corporate financial jargon sifting through balance sheets. It's really how to be a professional stock operator. That is a great book. All right, we're coming up on Mott Street. We're actually gonna make a left here, and you'll notice how dead Chinatown gets just south of Bayard Street. So this is north. Now check this out, look at south. Boom. It goes radio silence down here. It's almost like you're walking on a movie set in a way. Isn't it cool? Oh, MBA Elias, that's another great classic. Hold on, let me read this comment. This is very important. MBA Elias is everything you need to know about finance and investing by Bill Ackman. the lemonade stand case study, one of the best on YouTube. That is a fantastic one as well. You know, I was thinking about this the other day because I was reading this tweet by this person who was complaining on the internet. And a lot of people tend to do that now. And he was complaining that, you know, it's so hard for the Generation Z and millennials to get ahead. It's so much more difficult. You know, our parents had it so easy. And I'm like, no, they did not. Now, I'm like on the cusp of being Generation Z. I just turned 28. But when my parents, well, my mom had some college. When she went to college, you couldn't literally have a supercomputer attached to your hand, like we do now, called an iPhone. If you wanted to know something, you had to go to a place called a library, right? And you had to look it up in an encyclopedia. You couldn't just say, hey Siri, who's the president of Zimbabwe, right? And it would, boom, instantaneously give you the answer. You couldn't watch a YouTube video on how to build a discounted cash flow model yourself. You essentially had to either get taught by somebody or seek out that information for yourself, which would take hours. Now, technology, again being so deflationary, has essentially made the cost of most education zero. Now, granted, if you're going to be a doctor, lawyer, engineer, you've got to go to a top school and you've got to do it. But in a general sense, access to information has never been more free and open to anybody. So I would disagree. I would say it's never been easier to sort of make something of yourself, especially in the United States in 2023, because there's just so many ways to get connected with people. You know, if you want to talk about networking, you could literally send out one email to 1,000 people, 2,000 people, and quite literally have 2,000 connections in a day, just by one click of a button. You couldn't do that back in the 80s, right? You actually had to pick up a phone and start to dial it 100 times, right? And then maybe somebody would pick up on the other end. Now, you have LinkedIn Messenger, where it is a consolidated database of professionals that you can get to know, you can network with, you could bounce ideas off of them. So I would argue it's never been easier. And I think that's the optimistic reframe that many people need to start having. So don't get pessimistic. We could potentially be entering the greatest wealth transfer the world has ever seen, particularly if artificial intelligence plays out like many people are predicting. I mean, you're talking about massive expansion in companies' profit margins, profitability, massive upticks in worker productivity. So I would argue the best is yet to come. Wow, guys, look at that. That is an awesome shot at One World Trade Center. Hang with Mark Mom says, yes, I had to pay for each minute I was on AOL back in the day, and my portable phone was 18 pounds. You see? I think, you know what it is? It's, if anybody's done some research and looked into the law of slow-moving disasters, it's if you see a problem super far out in the distance, chances are you're going to come up with a creative solution before the problem really becomes a reality. And it's the same thing with anything in life. Technology is such a gradual progression in a person's life that you just naturally adapt to it over time. So, you know, people who are 20 years old now, they look back on the baby boomers, and just because a house cost you $50,000 back then, they're like, oh my gosh, life was so much easier. But it took 20 times, 30 times more work for them to acquire the skills, the knowledge, and the education. So I would argue the standard of living in America continues to get better and better and better. And I think it's going to continue to get better and better and better when my kids are my age. And I think that's good. I think that's a good thing. So don't get too pessimistic. Brick Stonewall says, I remember when phone booths were a dime. Oh, payphones were a dime at phone booths. I don't even think I've ever used a phone booth in my life. Just to put that in perspective. That's crazy. You know, now some people, when their phone dies, they don't even know what to do. They don't know how to get around. Hey, Vivian Francesca, good to see you. We are almost at the very entrance of the Brooklyn Bridge. We got a little bit sidetracked there, so we overshot the Brooklyn Bridge by about a mile, but we're making up good time. This is where all the courthouses are. I'll quickly show you guys all the courthouses here. Now, back in the day, way back in the day, when I was in high school, I took my NYPD test in here. I think I was a senior in high school. I think I was 17 and a half years old. And I think for all civil service tests in New York, you could take the civil service test once you turn 17 and a half, I think. So when I was graduating high school, I remember taking the train down here, super excited to take the NYPD test. Yeah, right in there. Ah, Ethan is here. Says, Tom, have you ever been to LA? I haven't, but a little bit of a contrarian thinking here, potentially. I'm planning a trip to San Francisco. Now, I've never been there either, but I feel as if the negative sentiment around San Francisco is so egregious right now that I'm not buying the narrative. Now, again, I may be wrong. Everything I say on this live stream, I could be totally wrong. But I don't buy the narrative that San Francisco is going to go by the wayside of a Detroit. Now, that's not to say that there's not horrible things going on in San Francisco with the homelessness, with the crime, with the drugs. I'm not trying to say that's not happening. What I'm saying is, I think it'll bounce back. From the friends I know in the tech world, startups are still choosing to go to San Francisco to start their businesses. And so long as the startup culture and the startup environment is healthy, I think the political environment is going to change for the better over the next couple of years. And I don't know, I mean, maybe in 5 years, my prediction is that we could be covering very interesting topics on our live streams as it relates to San Francisco. I'm sure we'll be reading a headline that says, office prices in San Francisco hit records in terms of price per square foot. I wouldn't be surprised in 5 years' time we see that. Now, that doesn't mean I'm going to go buy something right now. It just means that I'm going to start my due diligence phase. But anytime you have a mispricing or a misallocation or a dislocation in the marketplace, be it equities or be real estate or really anything, that's usually where you have the potential to generate alpha. Again, the potential. So I'm not saying that San Francisco is going to 100% make a turnaround, but I think it warrants further investigation. So, haven't been to LA, but I am going to go to San Francisco. Oh, is that right? Brick Stonewall says San Diego recently passed San Francisco as most expensive. Well, I think during COVID, you saw a very similar dichotomy happen in California, sort of like what happened in New York. During the pandemic, a lot of people left Manhattan. They went upstate New York. They went to South Florida. in California, many people left the inner city of San Francisco and went out for more space in places like San Diego, you know, neighboring communities. We'll see if they come back. We'll see. Okay, now we are finally on the Brooklyn Bridge. And if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually start these live streams at 8:30 p.m. So if you'd like to join us, feel free to click the button. And we usually do these every night at 8:30. But I don't know, anybody here from San Francisco? What's the real estate environment like in LA? In terms of commercial real estate and residential? Okay, Ethan's from LA. Everything in Miami says, how's the air quality? Not great. The air quality has been really, really poor this year in New York in the summer. Not sure why. I think it may have to do with our neighbors to the north and Canada. Fly Girl from Austin, Texas. This is 130 William, the building that we were talking about the other day. Beautiful building. Vivian's is glad I caught the live stream in time. We're glad you're here. Hey, Daniel G, appreciate it. Have a good night. Hey, Hood. This is I'm from and live here in San Francisco, own multiple barbershops, and would love to have you when here, best razor work in the city. Hey, can you please actually send me an email? I think my email is in the link in the description at walkswallstreet@gmail.com. I would love to connect with as many people as possible when I visit San Francisco at the end of August. I think that's the most important part of a due diligence phase, is to actually go out and talk to people in the community who are born and raised, own businesses in the community. That's how you're really gonna know if things are a good buy or not. Some people, as it relates to real estate, can get too caught up in the broker pitch decks, if you will. They get too caught up in the spreadsheets. I think sometimes it's better just to go right to the community and ask how things are doing. Almost halfway over the Brooklyn Bridge. This is One Manhattan Square. The big building sticking up. That's another Xtel development. One Manhattan Square. TC, what's up, man? All right, I think this is a good place for us to conclude the live stream, because the phone is low on battery, and we did start pretty late, so I do apologize for that. But thank you everybody for coming out. I think this was a really fun stream. I think it was a good conversation. I learned a lot. I love your feedback on things. We'll pick this up where we left off tomorrow at 8:30. So if you enjoyed the stream, feel free to leave a like on the video. Click the subscribe button if you're new. Feel free to click the link in the description to sign up for our free investing newsletter. Behind the Street, that's our Substack. And we'll see you all tomorrow. I'll leave you off with this gorgeous view of the Manhattan Bridge from the Brooklyn Bridge. So Steph UH, thank you so much. Elizabeth Gill, Brick Stonewall, Cayenne Pacific, Wendy England, Abdullah, Tom AK, UniJ23, NBA Elias, thank you so much. All of our moderators. Guys, it's already Thursday, which is great. So have a great Thursday tomorrow. God bless. Always a bull market somewhere. You just need to know where to look. And we'll see you all right back here very soon.